I was watching CNBC on TV the other day, and during their Power Lunch show, they mentioned an investing app me and many millennials use, Robinhood. The reporter was asked about how do they make money, and she replied with this.
Kate, how do they make money?
Payment for order flow. That's the same way that all of these brokers are now making money. It was their revenue model from the beginning. So they sell customer trades to market makers, like Citadel Securities, for example, and they get paid the highest rate of any of these guys. But it's now become the standard across the industry as nobody is charging for trades anymore.
Although this is completely correct, Robinhood makes money through different ways. So in today's episode, let's find out how a broker that charges the end consumer nothing makes money. The fintech startup Robinhood, named after the legendary heroic outlaw who took from the rich and gave to the poor, has reached the astronomical valuation of $11.2 billion after the latest round of funding. With such an eye-popping valuation and a possible IPO in the works, the company seems well positioned for more growth ahead. Robinhood was started by two people who were fed up with the way you had to trade. For both founders, Vladimir Tenev and Baiju Bhatt, the idea that it only costs brokerage firms pennies to execute trades, and yet they charge hefty commissions and require account minimum was just not right. They took for a mission to democratize finance for all and grant access to everyone. The cost of trading has gone down significantly since the internet, so why not make it free? And that's how Robinhood the app came into existence. Although its business model was questionable and completely unconventional, the company has succeeded so well with its business model that it disrupted the whole industry and pushed basically all brokers to offer commission-free trading. But all this success didn't come without skepticism, as many questions how the company makes money. Robinhood makes money through 4 different ways. Premium services. This is very straightforward. The company charges a monthly fee of $5 for more in-depth fundamental data and research provided by Morningstar, Nasdaq Level 2 market data, bigger instant deposits depending on account balance, and margin trading. For margin, only the first $1,000 is included, with the monthly $5 fee. Any further borrowing is charged at an annual interest rate of 5%. Interest. This one is supposed to be the biggest share of income Robinhood makes, and it was the initial way of revenue the company always mentioned when asked on how they make their own revenue.
Collecting interest on customer cash balances.
The cash that you have sitting in your account, when the markets are closed, we invest that in money market funds, collect interest on it.
Basically, they make interest on 2 things, the cash and the stocks. They make income from uninvested cash balances by investing them in market funds and federal secured bonds, and the income from the stocks is by lending the stocks to short sellers through their shiny debit cards. A part of being quite good looking cards, those cards and the whole cash management program is another revenue stream for Robinhood. Basically, the Robinhood debit card receives an interchange fee that is passed on to Robinhood. Don't worry, you, the consumer, aren't charged anything, but the fee is collected every time you use it. It's the way card providers like Visa and MasterCard make the bulk of their money. Let us know in the comments if you would like us to cover that in the future. Finally, there is the one initially mentioned in the clip I saw.
Payment for order flow. That's the same way that all of these brokers are now making money. It was their revenue model from the beginning. So they sell customer trades to market makers, like Citadel Securities, for example, and they get paid the highest rate of any of these guys. But it's now become the standard across the industry as nobody is charging for trades anymore.
Robinhood has been making money by selling order flow for years, and only disclosed it after it came out from Bloomberg that the company makes almost half its revenues from this practice. And to be honest, it's a little bit weird to criticize Wall Street, then go do some of their shady practices. Let me clarify what selling order flow means. Basically, Robinhood doesn't execute your trades within exchanges like the NYSE or NASDAQ, but rather they send your order to market makers like Citadel. Let's assume you decide to purchase a share for $100. Citadel will quickly purchase the security you want for about $99.95 and sell it to you for $100. You still get the share you wanted at the price you initially want, which was $100. Citadel makes some revenue from the difference and provides Robinhood with its cut. Robinhood made $180 million in the second quarter of this year. As a matter of fact, and as this practice has become standard since basically all brokers offer now commission-free trading, Robinhood is the one that makes most money on equities and options.
Market makers like Virtue or Citadel Securities pay Robinhood and other brokers to execute client trades. According to recent SEC disclosures and analysis by Piper Sandler, Robinhood fetches the highest rate for equity trades at 17 cents per 100 shares. Schwab, by comparison, gets 11 cents. And for options, the payday is way bigger. Robinhood and TD Ameritrade bring in the highest rate at 58 cents. That's way above the industry average.
And that's it. Now you know that Robinhood makes the bulk of its money from selling the order flow trades, but also has other revenue streams that are the debit card, the premium services, and the interest they earn from uninvested cash and the stocks customers own. It's overall a rather good business model with various revenue streams. I myself use their service, and I think not only their IPO will be a great day, but their journey so far and all the disruption they caused to make the average consumer get the most value and have an easy access to financial markets is simply fantastic. I do share the opinion that selling order flow could be problematic at some point, but I don't think it is for now. What about you guys? What's your opinion on Robinhood? Also, feel free to let us know about any other topic or company you would like us to discuss next. Finally, if you are still around, please subscribe and hit the like button to support us. Till I see you next time, peace.